What's up guys, it's Andrew here from Pennant Players back with another video. Today we're going to be talking about the basics of momentum trading. So stay tuned, be sure to like, subscribe, and share for more. So what is momentum trading? Well, in the stock market there's a common phrase to buy low and sell high. Momentum trading is essentially buying high and selling higher. It's getting in on price action that is going up, buying in, and continuation up. So a great example in the real world, an analogy of what this might be like, is essentially jumping into like a moving car. You know, it's moving, it's gaining speed, so you jump in it and you catch it, while it's moving, and then it continues moving forward, and then you get off. You don't have to start the car, wait, then start moving, gaining speed, blah, blah, blah. So momentum trading in this fashion can be a very useful tactic because it is easy entry and exit points. You're essentially riding the price action up as it is already going up, and it's very quick as well. Something that is a negative, a drawback of swing trading, which is a different tactic of trading, a different strategy, is that you have to wait for the move to happen. So with a swing trade, you're buying low and selling high, but you don't exactly know when that high will happen. So you have to buy low, possibly wait a few days, a few weeks, a few months, a few years even, before that uptick starts to happen, that reversal, that trend starts to go upward. So something, again, that's very useful about momentum trading is that strong upward movement that can carry you in a very, very fast fashion. So these are very good day trades, very good weekly trades, as you can get in and get out immediately with very little potential for, sitting there for a while. However, they do tend to be a little bit riskier, and we'll get into that right now. A great example of a momentum trade has been TNXP. Now, TNXP was alerted in our watch list video previously, right at about this range here, this 84-cent range. And what we can see here is a strong move to the upside. So we're looking for a continuation. We are buying high relative to what it's been trading at. It's normally been trading at around this, 50 to 60 cent range, and now we were suggesting a buy at 85. So why? Why would we be suggesting a buy at 85 cents when it was trading at 55 cents? That's so astronomically high comparatively to what it's been trading at. Well, it's because it's a momentum trade, so we can see the movement start to come in. We can see the volume start to come in to this move here. We could see much more bullish volume, much greater amount of people trading it, much more speculation around it than it has been before, combined with the technical pattern of an ascending triangle. If you want to learn about triangles, we have a video on that as well. But the combination of this ascending triangle with the momentum caused a buy alert at Friday the 17th after hours. So we were looking for this into this next week, and it surely did continue. Now, this was the anticipated move, was a breakout above this 85, 86 cent range, continuing into this large move up with a possible profit of nearly 50%. So this is a phenomenal momentum trade, and with these momentum trades, you're definitely going to want to look at a few things, one of them being hype. Now, you can go on a bunch of different sites, Discord chats, YouTube videos, stock twits, anything you like that people are discussing these stocks. You can see how many watchers they have, track the amount of watchers, track the amount of people that are talking about them, just gauge the level of interest comparatively to how the interest has been before. So obviously we know the more people buy it at a higher price, that keeps driving the price up. So that's what we're going to want to see here. So you can see here over the weekend, it's had a lot of hype surrounding it. People were anticipating this move, and it almost became a self-fulfilling prophecy. This is what we like to see with momentum trades, a continuation of a pattern. So we saw this here, alerted it, and it made this move up. Now, another thing to keep in mind about momentum trades is the possible downside risk. Now, we know the pros, it's a fast in and out, and a potentially very large profit margin, but a con would be the potentially very large downside risk. So an issue with this tactic is that it can possibly lead to massive losses if the anticipated move does not come to fruition. And what I mean by that is if the pattern takes a downward turn instead of continuing. So say example, here we alerted this at 85 cents. Say that the move did not take place and the volume decreased and it just went back to what it was. You could have lost, almost the same as what you would have gained by this trade. This 35-36% loss could have taken place. So that's just something to keep in mind. There is a much greater potential risk for loss on momentum trades than there is for swing trades or other forms of technical breakout patterns. So this was a great example of one that had a close on a particular day, which we could then alert in the after hours to then take a move up the next day. But this tends to not usually happen. Another thing about momentum trades is you want to get in typically on a day trade. So you buy the shares and then sell them for the same day, just riding that price action up and getting out as quickly as you can. An example of this would be GENE. Now, this was a trade that was drastically going up on a certain day. We can see here, 5-day, 15-minute chart. On the 15th, we saw a absolutely massive increase in price. However, we did not see the continuation into the next day. We saw quite the opposite, actually. So this is why I would not recommend on a typical basis for a momentum trade to take place overnight. It's typically more of an intra, day trade type situation. So GENE, we can see here, starting at 8 a.m., we saw an increase, and then market opened at 9:30. We just saw this massive bullish increase of almost 250%. So this was a quite massive trade, and you could have bought in at the hype. Market opened 9:30, saw this increase, kept going, maybe 10:30, maybe 11 is confirming this pattern for you, whatever your parameters for a continuation momentum trade may be, and just ride it up. You could have rid this from 11 at nearly $4 up to 12 only an hour later at $7. So that would have been a phenomenal trade for you in only an hour's time. However, there is a much greater risk for losses. Now, again, with this one, this is why we don't typically recommend for a holding of momentum trades overnight, because the momentum kind of fades. There's not as much, people sleep, and it's just not a great scenario unless there's a huge backing, technically, and hype as well. So this, for example, if you would have anticipated a continuation overnight on this, it did not take place. So we can see here going into the 16th, all we saw was a decrease, a massive decrease now from the peak here down. It was about 45%. So again, this is why we don't typically recommend a momentum trade overnight. So I hope you enjoyed this video. I hope you learned something about momentum trades. Please be sure to like, subscribe, and share for more. This is Andrew from Pennant Players. Stay green, guys.